Good morning and welcome to Market Day Report. I'm Chris Swift. I'm looking forward to seeing how we're going to wrap up this week after a really big week last week. We saw grain markets trade quite a bit higher last week. We saw both corn, beans, and wheat all set new highs, and we got them back up again a different handle now. We got the beans up above 12. We got the corn back above 480. So let's see where we're going to start today after Sunday night's trade. Wasn't a whole lot that went on that I really saw. The May contract up 1.5 at 448.5. The July down a penny at 459.25, and there's that December at 481.25, down 1.5. Soybean market, it was a little bit softer as well. The May contract's up 4.25 at 12.06 even. The July down 1.25 at 12.13.75, and there's that new crop November 11.98.5, down 2.5, right at that $12 level. Let's see what Chicago wheat's done. I know it was a little bit softer as well. May contract up 19.5 at 6.06. That'll be interesting. That is into expiration there within the next week or two. So it may be actually this week. The July contract down 4.25 at 6.18.25. Out to the Dees at 6.65.25, down 3.25. Kansas City hard red winter wheat up 23 on the May contract at 6.60. Again, I think there's probably some issues there with the expiration of that contract month. The July is down 9.75 at 640.5, and December down 8.5 at 674.5. And see what Minneapolis spring wheat. It's unchanged on the day on the May contract. The July down 9.5 at 7.05, and December down 7.75 at 723.5. I got Brian Hoops on the line here. Brian, certainly do appreciate you taking the time to be with us here this Monday morning. We saw a lot of price activity on Friday, actually all week last week, that gave us some gains. What does that lead you to want to do this week?
Well, good morning, Chris. Yeah, it was a very active week last week with Kansas City, Chicago wheat really leading the upside in the markets. Now, if you look at the charts, we matched last week's highs, matched the highs from April 29th. So almost a double top on the charts there. We pulled back from that area on Friday. And again, in the overnight, there was some welcome rain across all of the hard red wheat belt. A lot of rain in the eastern parts of Kansas and Oklahoma, the Tulsa, Wichita areas, lots of rain. Down here, we've had a tremendous amount of rain, and wheat crop looks really, really good. It's that western Kansas that still remains a little dry. But you look at the forecast for the Corn Belt, and it's turned drier, considerably drier than what it was Friday. So the 6 to 10 day through May 15th or so is below normal dryness, and that should allow planters to start rolling once again. So there's some rain across the Midwest up front moving through today and tonight, and then we get into that time frame where we start to see much drier conditions. The planter is going to be running, unless you're in a situation where you're had flooded in your fields or water standing. It should be pretty ideal conditions to work through.
Absolutely. So last week we saw, again, that spurt there, but was there anything fundamentally that you said, boy, this might stick around for a little while longer, or most of it just kind of insequential due to the rains?
Well, we've talked about some of the areas down in South America that have had really heavy flooding, and that has caused probably some crop damage in Argentina to the corn crop. Buenos Aires Grain Exchange last week lowered their estimate of the Argentina corn crop by 3 million tons. And so everybody's kind of looking ahead to this Friday's supply and demand report from WASDE and looking at possibility that maybe this USDA will finally lower their estimates of the crops. They've been very reluctant to lower Brazil's soybean or corn productions. They may lower slightly the Argentina corn crop or the soybean crop there, but that's kind of what everybody's looking forward to is the possibility that they lower that number just a little bit and tighten up the world ending stocks. But this will also be our first look at U.S. Yield potential and production potential. So this is could be kind of a volatile week as far as that report goes on Friday. And with planters resuming, it's probably going to be hard to see the market really resume some upward bias. We had hoped that maybe December corn could get up into that $5 range. We could start making some sales. I'm wondering if we're going to be able to do that with all this moisture that's come through and now dryness. It may be a very difficult task for that December corn board to get up into the $5 mark. We may have peaked, in fact, last week.
Wow. Brian, certainly do appreciate it. Stay with us. We're going to go away, take a real quick commercial break. We're talking with Brian Hoops. Y'all be good. Stay with us. All All right, welcome back to Market Wrap. I'm Chris Swift. Let's take the commodity market day report. I'll be all right. So let's see what we did in the livestock. We closed a little bit higher on Friday, but a tremendous amount of volatility that we saw in the market. That June contract had over a $26 price range multiple different times and through the week. But June closed down 12 at 176.67. The August contract up 62 at 174.57, and out to the D's up 40 at 182.37. Let's see what our feeder cattle market wound up at. And on Friday's close, we were down 30 on the May at 243.30. That feeder cattle index came out at 242.39. So you're within less than $1 of the feeder cattle index there going into delivery. August is down 47 at 254.75, and September down 20 at 255.77. And the hog market, let's see what it was doing. Down a little bit on the May contract, down 65 at 92.42, and June down 97 at 98.95. The July contract down 67 at 102.85. Invite Brian Hoops back in again. Brian, we did see a tremendous amount of volatility in the cattle markets last week, but in all honesty, we really didn't wind up any place different in the futures, but we saw a little bit of gain in the cash.
Well, yeah, we did. I was a little surprised to see that $2 higher movement in the Southern Plains, about $1 higher at address basis. So it sets a tone for a firm cash outlook for this week once again. You looked at the June board just a second ago, and that was down on Friday. We're heavily discount to that cash market. So, the Goldman roll has just started. Traders, especially the funds, will roll out of long positions in the June and step in and try and buy August and the Octobers, and that was very evident on Friday. And so it puts June at that big discount, makes it attractive actually from a longer term standpoint, despite these big numbers or bigger numbers anyway that are coming at this cattle market. June's with that big discount, unless the cash really falls out of bed, it's poised to try and move higher. So outlook this week, Packers margins still deeply in the red. Hopefully the cutout values can start to find a bottom and move higher on better demand trends. That's what we badly need. Otherwise, we're going to see, in the weeks to come here, we're probably going to see Packers continue to slow those kill speeds. Memorial Day's coming up. That'll be another time frame where they will try and slow the kills to prop up some of their margins. And, we badly need to work through some of these cattle that are coming at us.
And there's going to be quite a bit of them. I mean, our last cattle on feed report was 11.86 million head on feed, and we know that our marketings have been very low. Granted, I understand that the placements have been very low too, but I've kind of seen evidence maybe we're catching up just a little bit from that week that we lost in the month of April there. Maybe we start to see that catch up just a little bit there. Brian, anything you see in the hog market real quick?
Well, a lot of technical weakness in that hog market. We've really broken down and closed, I think, the lowest levels since March 25th or so on Friday. So it's a technical sell-off here in this market now. It's probably oversold, due for some sort of a bounce, but I think any rallies are probably going to be selling opportunities. June has already, tested or broke above its weekly resistance. Now it's breaking back down below it. Probably the highs have been scored in that June contract, and traders are going to be likely to sell rallies in that market.
And there's quite a bit of convergence still to go. If I'm not bad mistaken, that index is right around $90, so still in the $100 range for the June. Still got some convergence of basis to go. Brian, really do appreciate you taking the time to be with us this morning. It's Brian Hoops. He is with Midwest Market Solutions. And Suzanne, good morning to you.
Good morning. Happy Monday,
yes,
Chris. Good to see you. Thanks for breaking it down. Of course, getting ready for those markets to open.
Absolutely.
Appreciate you being here.